Hey, buddies, welcome to the finance reporting uh, F7 session. And in this video, we will look at the consolidation question from March, July 2020 sample question from the past paper. So let's straight away dive in to the question. And here it is, a question in front of you, which you can see. This scenario relates to two requirements. Okay, so far so good. And Planck has owned 30% of large companies in 1st July 2000 Act 7, and it acquired 80%, 85% of strip company on 1st April 2000 Act 8. Remember, always remember uh, the dates. Be careful about the dates, right? So 1st July 2007 uh, for the art company, and 1st April exit for the strip company, the statement of profit or loss, right? We have revenue in it, we have cost of sales, gross profit, distribution cost, admin expenses, investment income, finance cost, profit before tax, which is my PBT, income tax expenses, profit for the year, other comprehensive income, gain on revaluation of land, total comprehensive income for the year, and the following information is relevant. Uh, what's the requirement, by the way? Prepare the consolidated statement of profit loss and other comprehensive income for the year ended 31st December 2008. So that means the year ended 31st December. Let us go back up. Uh, Strip company will be consolidated for 9 months, and the ARC company is 35%, so it's probably our associate. Straight away, let's jump to the relevant notes. A fair value exercise conducted on 1st April 2008 concluded that the carrying amounts of strip company net assets were equal to their values with the exception of them of machinery, which had a fair value of 8 million excess of its carrying amount at 1st April exit. The machinery had a remaining life of 3 years. Depreciation is charged to cost of sales. Okay. Depreciation will be charged to cost of sales. Just remember, and all the assets are equal to their fair value with the exception of the items, machinery which had a fair value of 8 million in excess of its carrying amount. At first, Apple exit, the machinery had a remaining life of 3 years, and the depreciation will be charged to cost of sales. So let's go and look at the. We will do what we will do first. Our workings. Okay. So let us open our. I'm just leaving some space till here, and here we will look at our work. My working one is related to what? Related to fair value of the asset. So fair value. Just second. Fair value of asset. It's worth, yeah, with 8 million, and it has a remaining life of 3 years. So fair value of asset. First, it is by machinery, right? Machinery, and I'll be writing it as 8 million as 8,000. So machinery debit 8,000, right? Credit consolidated reserve, that is we acquired 85%, right? If I'm not wrong, let us just check it again. Yes, it's 85%. Consolidated reserve means consolidated retained earning, right? So reserves, retained earning, same sort of stuff. So I'll be taking the 85% because it's a share of parent. So 6,800 and NCI non-controlling interest credit 8,000 into 15% done. So far so good. We are done till here. Then next heading is relatively obviously when we have increase in value, so our depreciation will also be increased. So in this case, um, what will be that? What is the life of asset? It had a remaining life of 3 years. So 8,000 divided by 3. Let us check this. Check that. Uh, excess, sorry, excess depreciation. So it's is equal to 8,000 divided by 3 is 2,667, right? It's our excess depreciation. Now, just recognize it. Let us recognize this consolidated reserve. Increase by it. So consolidated reserve debit by, so it's 2,667. So it's 2,667 into what? 85%. Second. Right, so it's 2,267. Then we have NCI, which is also debit because it's decreasing. So 2,667 is 0.15, 401, 400.1, and then machinery credit by 2,667. Yeah, 2,667. We are done with our first working. I hope you get it till here, right? Just to make the presentation better, I just created this box. In exam, obviously, uh, you don't need to do that. But if you want to make the presentation for better, you can do it, right? Now, let's go back to the next part. Since acquisition, Plank has sold goods to strip company totaling 39 million. Strip company had 1 quarter of these goods in inventory at 31st December 2008. During the year, Planco also sold goods to Arco for 26 million, all of which Arco held in inventory at 31st December 2008. All of these goods had a markup on cost of 30%. On cost of 30%. Now let's go back to the sheet and let's look at the this working. Right, sorry for the mistake over here. I just make a correction. As you can see, 8,000 is the excess value divided by 3 years life, and we consolidating for 9 months. So we will charge the depreciation in this year for 9 months. So it is multiplied by 9 divided by 12. We'll get 2,000, and the rest I guess you can understand. 2000 into 0.85, okay, and NCI 2000 into 0.15%, and machinery credit 1000. Right now, just once again, Blanco sold goods to Strip for 39 million. Strip had one quarter of these goods in 31st December. During the year, Blanco also sold goods to R for 26 million. Sorry, right? So now what we will do, uh, yeah, to ARC for 26 million, all of which are co-held and inventory at 31st December exit. All of these goods held at a markup on cost of 30%. Now let's do it. Firstly, what we will do, yeah, so that's our second working. Unrealized profit blank to ARC, blank to ARC, uh, sorry, blank to it's ARC, it's strip, blank to strip, and now what I will do, 39 million is equal to 39. I'm just taking it as 39. So 1 is to 4, 1, 4, and 30% is the marker, right? So into 30 divided by, as you know, cost is always 100%. So I'll take 130 and I'll get 2.25, right? So that will be around, 250. If it's confusing for you, let me make it much better for you. 2 to 5, right? So next, I'll take unrealized profit, blank to arc. What's that? 26 millions. I'm taking it at 1,000. 26,000 into 35%, and into 30 into divided by 130. What I'll get? Let's see. 2,100. Done with this working as well. I hope you get it. Now let's move to other one. Uh, the investment income of Plank Company for the year ended 31st December 2008 it includes dividend from Strip Company and our companies. It also includes 5 million interest receivable on a loan made to Strip Company on first April exit. Okay, so that need to be cancelled. Especially between Plank and Strip, because they are a single entity. For consolidation purposes, the loan will be cancelled in the consolidated books. And so let's dive into our XG. Well, no need of right now for the you know Excel sheet, because the loan will be cancelled in the consolidated books. And as far as the R company is concerned, look at the Strip company paid a dividend to shareholders of 18 million on 31st December. Our company paid a dividend on 31st December, right? This we will look at into the part which we will look into the investment in associate. In Plank company consolidated statement of financial position 31st December 7. The carrying amount of Plank investment in our company was 145,000. This was calculating using equity accounting. We will look at again. All other comprehensive income accounted for 1st April exit unless the otherwise indicated. All other items in the above statement of profit or loss and other comprehensive income are deemed to equal evenly for a year. Right, so we are done with all the notes. Uh, Go back. See the cost of sales, plant, strip, associate. Okay, distribution costs we have, a depreciation we already calculated. These are the finance costs and PBT investment incomes we have here, and admin expensive, distribution costs, all done. For the purpose, I'm highlighting them. Please look at them carefully, and that's it. Uh, Now, first of all, let us make our life little easy. How? Let us do that. I will do the working of third working, that is cost of sales, right? So, blank company, what's that? 320,000. Go back, strip. And for strip company, what I will do, I will go back. Strip company, and it was 81,000. I just highlighted, but we will look at for 12 months, 9 months only. So, oh, sorry, 81,000. Yeah, done. 60,750. Intercompany purchases we already looked at. What was that? Intercompany purchases negative 39,000. And additional excess depreciation, plant and machinery, obviously. That uh, how much was that? Is equal to 8,000 divided by 3 into 9 divided by 12. Although, but yeah, just a second. We do not need to do that again and again. Just a second. Expectation is this 2,000, right? Unrealized profit adjustment. I'm writing a chart, URP strip, and URP strip. How much was that? We already calculated. 2250, right? 2250. Now just is equal to sum, right? When all add up, 346,000. So far, so good. I hope we get this working as well. Now, let's do another working, which is income from associate. We have done this one. I'm purposefully making boxes over here. So, income from associate. What I will do, share of profit after tax 92.57. In fact, 92.57. From where I get it from the profit from ACCA. So 92.57. In fact, I will do 92,570. Just showing how. Yeah. So it's 92,570 into 35%. As it is our share, so it's 32,3995, and then what we will get, we will take unrealized profit R, which is, if you remember, 26,000 into 35% into 30 divided by 130. I'll get 2100. Just do the total. Right, so 2100, and then I will take next working after that, that is share of profit, total comprehensive income to parent and NCI. NCI, so strip post acquisition profit, strip post acquisition profit, and I'll get it. How much is that? 66,000 into 85%. Sorry, into 9 divided by 12. Yeah, it's 49,500 less excess depreciation. Excess depreciation, which is the two. Let's link it from up there. Rather, 2,000, and that should be negative, right? It's negative 2,000, and what's the total? 47,500. Dun, 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 dun. Then what will be the NCI share? Let me do that. NCI share into 15%. I'll show it here. Is equal to 47,500 multiplied by 0.15. That's it, 7125. Now my other comprehensive income is equal to 3,000 to 15%, 450, and is equal to 7125 plus 450, 7575. Bingo. We are heading towards end of our workings. Then, yeah, end of workings. Now, what we will do finally, we will make the consolidated statement of profit and loss. So, revenue, we will take full for the parent company, 700,500. 705,000 plus 218,000 into divided by 12 minus the intra-group trading. I'll get 829,500. Then cost of sales COS. You should avoid the short writing in an exam, right? I just linked this answer for the cost of sales on here, and it's negative. I will get my gross profit. So it's just for the presentation. Yeah, gross profit. After gross profit, I'll have distribution cost, which is 58,000 is equal to 58,000 plus how much for the script? 16,000, right? Remember, we will only take it for 9 months. 70,000, but yeah, it should be negative. Then admin expenses. Admin expenses is equal to 92,000 plus uh, how much? 28,000 for the script company. And remember, don't forget proportionate. So, and one more thing, negative. So what? 92,000 plus 28,000. Just let me do it like this. Oh, sorry. Yeah, like this. Just a second. Error in formula. Right. So it's admin expenses 113,000. Uh, see what was happening in the formula over here at my sheet. Here I did like this minus 58,000 plus 16,000 string the correct one. Actually, no, it will show like this, right? So what you should do, just place the bracket before showing it with negative. Now see, it's giving the right answer, minus 70,000, and down there it's giving 113,000, right? So avoid such errors in the exam. You should do like this, otherwise you may struggle due to errors in formula. Then other expenses. Other expenses is equal to negative. Bracket open. Now what I will do for other income, 46,000 plus 9 divided by 2,000 9 divided by 12. Oh, just yeah, into 2000 into 9, so 9 divided by 12, bracket close, minus 5,000, the interest receivables, minus 12,250, and minus 15,300 of what? Let me show you again. 5,000 that is related, and 2,000 that is related to the investment income somewhere. Uh, as you can see over here in strip company, right, and 12 to 50 and 9 to 1530 is relating to the dividend incomes which the groups given to each other. So that's all need to be deducted because it's related to the no consolidation. The difference is that it's again showing that somewhat. uh, 37, it's saying 37. Okay, so this one. Oh yeah, just into 9 divided by 12. I can show you right now. So hopefully, yeah. Now 4950. Now it's the right answer, right? I just forget typing error on my side. Then share of profit of associate, that is 35%. I am simply writing it. Let me think of it. Right, so share of profit, we will get, here it is, 32,399.5, and URPR, we will deduct it from there, we will get 30,299.5, just link it. So we are done till share of profit, right? Now, now what, now we will get, we will have to the finance cost, FC, the finance cost, and for that, what we will do? Do some so because it's 1,000, it's 12,000 plus uh, 14,000 of subsidy strip for 9 months, obviously. Right. So minus the 5,000, the intercompany interest receivables. So we will get 17,500. But yeah, for reason I didn't. Let me put minus 4, minus 17,500, and finally we will get profit before tax is equal to sum all take all above by sorry, not from here, but from after the gross profit. Yeah. So 480 and all of them. Let's get it. 480 500 minus 70,000 minus 13 minus 14 950. It's not other expenses, it's other income and it will be added. So that's the issue in it. Let's make it positive rather negative. And also 328 to 49. Fine. Yeah. Done till profit before tax. Finally, we will have income taxes given in the question. No hard and fast rule over here. So it is equal to some 51,500 and get some 51,500 plus. How much is that? 15,000 into 9 divided by 12. Negative though. And close. All done. 60 to 750. Finally, we'll get profit of for the year. Profit for the year. Then other comprehensive income, which is gain of revaluation of land, which is given in the question 2800 2800 plus 3000 now. So 5800. So the total comprehensive income for the year we will get sales income for the year is how much is that? Some all done 279, 299.5. All done. And that's it. So this is the question. Quite simple question. I hope they get it. I know it was a little bit annoying because of the the formula errors made by myself. Sorry for that, and I hope you get it or do it. See you next time.